Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Ha In, Professor of Economics at the Catholic University of Korea. Professor Ha, it's been a while. Good afternoon. Thanks for coming on.
Good afternoon.
Well, let's start with Wall Street. With the confirmation of the first case of the Omicron variant of COVID-19 in the U.S., stocks were down sharply yet again. Travel-related stocks hit especially hard. Today in Korea, though, a rebound in the stock market. What's the story in the global markets and here in Korea?
Yeah, New York stock market started very strong in the opening, but the indexes were plummeted after the news of a first infected case of Omicron variant in California. Dow Jones Industrial Average is rose by 461.68 points, which is 1.34%. S&P 500 rose by 53.96 points, which is 1.18 points. Nasdaq also lowered 283.64, which is 1.83%. Travel industries, including airliner, cruise, and resort, are especially hit hard, as you mentioned. U.S. government banned it to enter the United States from some African countries, including Republic of South Africa, in which the first Omicron variant cases were reported. Even though Biden says that the United States is not going to consider further travel bans at this moment, investors are afraid the Omicron variant would result in tightening the social distancing measures, including travel bans. Korean stock market, though, rebounded from the Omicron shocks. Kospi increased 45.55 points, 1.57%, and the Costa increases 0.28 points, 0.03%. Foreign investors bought more today. Export in November recorded the largest number in the history, especially the export of semiconductor were $12 billion, which is 40% increase from the November of 2020.
Well, if we can zoom out a little bit, Professor, the OECD is saying that the global economy continues to recover, but it says that recovery has been uneven around the world. In its latest report, the OECD says that while global economic growth missed its forecast in September, it's still cautiously optimistic. Tell us about this report from the OECD.
Yeah, OECD adjusted down this year's world GDP growth forecast from 5.7% to 5.6%. The respread of COVID Delta variant, supply bad luck, and the commodity price hikes are the reasons of adjusting down the forecast this time. Forecasts are adjusted down for U.S. from 6% to 5.6%, for Canada from 5.4% to 4.8%, for Japan 2.5% to 1.8%. However, they kept the forecast for Korea at 4%. Each country's vaccination rate and the social distancing measures make the differences in their forecast adjustment. Especially the low-income countries with low vaccination rate is left behind the pace of economic recovery. It also indicates that the imbalances among industries. They said that the sectors dependent on the interpersonal contact, such as travel, tourism, and leisure, are still in trouble. But the demand for the consumer goods are very strong.
Well, now, growth in the Korean economy in the third quarter, according to the BOK, came in at 0.3% compared to the quarter before. BOK says things are looking fairly good for the fourth quarter, but we'll have to have growth of over 1% this quarter to reach the yearly target of 4%. What do you see happening in terms of growth in the Korean economy?
Yeah, to achieve the GDP growth rate of 4% for this year, we need a faster growth for the fourth quarter than the third quarter. As a rule of thumb, we can get the yearly growth rate if we add up each quarter's growth rate over last quarter. First quarter's growth rate was 1.7, second quarter was 0.8, and third quarter, as you said, is 0.3. So up to third quarter, GDP growth rate was 2.8%. So we need 1.2% for the last quarter in order to get the 4% growth rate for this year. If we look back 2019 and 2020, fourth quarter growth rate were 1.3% and 1.1% respectively. So we need the average growth rate of last two quarters of last 2 years for fourth quarter. So my guess is that it is an achievable target if there is no major economic situation changes. The ease of social distancing in November would create a big boost in the GDP by increasing consumption in personal contact service sector. However, the biggest threat now is the tightening of social distancing measure as the emerging of Omicron variant. If government tighten the social distancing measure in December, then consumption will be reduced, which makes difficult the growth rate to be 4%.
Right, and consumer prices in the meantime in Korea last month hit a 10-year high, inflation that is. That was in large part due to fuel prices rising by around 34%, the most since 2008. Food prices higher too, along with housing costs and other things. Tell us about the inflation situation.
Yeah, the consumer price inflation was faster than 3% 2 months in a row. The inflation was 3.2% in October, and now 3.7% in November. So if we look at the inflation rate month over month, it was 0.1% in October and 0.4% in November, which means that the inflation getting harder. Even we eliminate the base effect from low inflation over last year's November. Due to the crude oil price hike, the price of oil-related product also increased. And moreover, the price of vegetables increased due to the cold wave in November. We can expect the effect of cold wave and crude oil price hike would subside a little bit in December. Omicron variant shock not only affected the stock market, but also commodity market. So the Western Texas Intermediate crude oil price reduced from $80 per gallon level to $65 per gallon level after the Omicron shock. But still, I expect that the base effect of low inflation in 2020 would make the inflation rate to be over 3.5% for the December.
Well, we'll be sure to check in with you, Professor, when these numbers, as these numbers continue to come out. We'll have to leave it there for today, though. Thank you, Professor, for sharing your insights with us today. As always, we appreciate it.
Thank you for having me.